Hello, everybody. This is Coach D with TackleTrading.com. I was just sitting here playing around with my virtual trading account, and I wanted to walk you through. Just had an opportunity to create a rolling order on a covered call. So here's what we're looking at. We got AT&T trade where I own 300 shares before it got beat up a little bit, and I sold some covered calls. I've actually sold several covered calls against it to hedge, and I currently have 3 covered calls. So we own the stock, promising to sell it at 39.50. We got 4 days till expiration. We're at the spot where we can buy those back. So let me just kind of show you where we're at. Let me go to the Analyze tab here. You can see we bought those for 17 or sold them for 17 cents a piece times 3, and now we should be able to buy them back for less than a nickel. So we can actually go place an order on that. So I'm actually going to go create a closing order, put those in to buy them back for nickel. That ought to make that trade commission free, and we're just simply going to roll the trade out. And so I'm going to go. I can do a rolling order, but I'm actually trying to make sure I get that nickel commission free. So I'm going to do a first trigger sequential order here, and if it's able to buy those back for less than a nickel, I think we should roll out towards January, around 46 some odd days. And if we promise to sell the stock at $40 a share, we can bring in another 24 cents of credit. So that's again 24 times 3 contracts. And this will do a really neat thing. It'll actually take and change where we max gain this position. It takes our maximum gain from around a $200 max gain to about a $400 maximum gain. Between the money we bring in, the credit, et cetera, et cetera. So it's just expanding it out, giving us an extra 50 cents to run. And there's a reason I want to roll this trade up, and is one, it's time. Two, you'll notice how it came down here. It had that little merger announcement, boom, broke down hard, found a bottom, and then it surged really well. And that is, to me, looks like a reversal kind of wave. And it surged real well, and it's done a retracement. You got a hammer, known support resistance zone, and I wouldn't be surprised to see it rally up. And so I'm going to kind of uncover it for that reason. So we need to go ahead and let's see if we can send that order in. I'll make it good till cancel just in case. Should be okay. But I thought you guys would like to see rolling up and out. Again, up from 39.50 out to 40. Out was going from December to January. Buying it back at a profit and then rolling out and receiving a new credit. Go ahead and I will send that in. And let me kind of walk you through what we just did, so you'll be able to see it for yourself. So here's the current risk graph as is, and it's got a nice little setup for a gain, but it caps us out at about a $200 gain, which you can see if you look down to the right-hand corner when I point at the risk graph. You can see that 201 gain. Well, if we go and we analyze and kind of walk you through what we were just doing, we'll go analyze the closing trade. So we're buying that back for a nickel. And then we're going to go add a simulated trade, which would be, and again, you can do that with rolling orders to make life a little easier. I was trying to maintain that nickel trade, so we got that. We'll go out to January, and again, we're looking at selling that $40 call and bringing in the 23 some odd cents. 24 cents. And when you go look at the risk profile, and again, we go 3 contracts. So now we've got 3 contracts. And to make this risk graph look like a regular covered call, we got to move that calendar out past the option expiration 4 days from now. So once we roll past, it should look like a regular covered call, and that moves our maximum gain out to $408. You can see down here in the, again, left corner. So gives us a promise to sell the stock at 40, get paid 24 cents to do it. Rolling the covered call up and out with a good timing mechanism to basically look at this as kind of a motive wave, a pullback into a known support resistance zone. And whenever I see a strong motive run like that, I usually expect to follow through. I don't expect it, however, to get much past 40 in the near term, which is why I'm happy to sell that covered call. This is Coach D with TackleTrading.com. Hope you enjoyed this.